Coming to you now, what is your view on the overall broader and the benchmark markets that we're seeing?
Good afternoon, and thank you for having me. I think for the last few months, we were one of the only PMSs in India who were really bearish on the valuations and the exuberance that the Indian markets were seeing. But now I think it's time to not talk about risk at all. Have a diversified portfolio is the max you can do, and we are jumping all in. I think by the end of the day, we'll be deploying all our funds into the markets.
And Anirudh, how would you deploy this? Firstly, I'm assuming that you would use a staggering approach, but where do you find more value in these markets? Would it be large caps or the broader markets?
I think both large cap as well as the broader markets. In the stocks that we like, we're seeing a lot of value coming in. The portfolio that we are buying today is down 30-35% from the all-time high it has achieved as a portfolio, and that is it for us. We are very happy that we are able to buy at these valuations. Currently we like something in pharma. We like where the growth will be for the next couple of years. We like a few companies in pharma sector, especially CDMOs. We like something in retail. We are confident in the leaders in different sectors. We like a company that you were talking about just before the show, who is very good in the capital goods sector. We are not concerned about the negative news about orders not coming in. See, the point is 3 months before, when the things were exuberant, all these companies were looking all right. Now you're getting those companies at 40-50% discount. So there should not be a problem buying right now.
Okay, so that's the overall view on the markets and your picks in it. But let's take a look across the top 3 stocks on the radar today, which
I have a follow-up question to what you had earlier alluded to. So, we have companies which are growing at the top line is growing at around 20-25%, the bottom line is growing at around 25-30%. You see expansion in margins, but these companies were trading at 70, 80, 90 times at one point in time when markets were frothy. After this correction, and as you've suggested, about 25-30% correction, valuations don't exactly look cheap at this point in time either. So under what circumstances would you in fact go ahead and buy? Or do you think, are you saying that the markets will continue to give some of these names that much of a premium irrespective of what mode the market is in right now? Anirudh, I believe you're on mute.
I'm so sorry. I think we just don't have to see PE in vacuum. We have to see PE with response to the growth. Look at the numbers these guys are posting. So when you see it on the PEG ratio basis, these stocks would look comfortable to you. And ultimately, in stock market, there is a very simple rule. Money follows where growth is. So ultimately, companies where growth is will tend to, trade at higher multiples than the ones where growth isn't.
Okay.
Apart from that, I would like to add one more thing. You need to have some visibility of earnings as well. That is what the market likes.
Okay, sure. So that's in terms of the markets.
Anirudh, coming back to you on your assessment on the entire IT sector right now, given all the plans and rhetorics that the US president has suggested, with that, of course, the significant weakness of the Indian rupee against the US dollar as well. Keeping all these factors in mind, your view and assessment of the Indian IT sector?
I think let's leave Donald Trump's and Modi's comments and etc. They're all politicians, and politicians have a way of working. The best thing to follow in the market is where the growth is. As your colleague was talking about a company where growth is good. It's one of our portfolio picks, and I believe this is what you should follow. Where can you get growth for the next 3 years? This is what we are focusing on. So the only IT stock that we hold in our portfolio is Persistent Systems.
And coming to you, Aditya, on your view on Persistent Systems?